Hi, Fabian Onetti for Winston Capital Advisors, covering the week of December 9 to December 13. And we start with the last Friday labor report, which was unbelievable. Market was expecting 180,000, and we got a whopping 266,000. That kind of set the pace for the Federal Reserve meeting that we had this past Tuesday and Wednesday. We're going to talk about that in a second. But clearly, it was a good start of the week with a very strong labor report. And also, last Friday at 10 a.m., we have the University of Michigan Consumer Sentiment, the index and the expectations, both above what the surveys were saying. So, the U Michigan is the most respected and followed in terms of consumer expectations and consumer confidence, and both came with a very, very strong indication. So that was, keep reinforcing the fact that we've been to this draw of deceleration, and now we are in a better tone with the economy. Clearly will be key on this whole issue of the Christmas shopping season, that we are now in the midst of that, the holiday shopping, and then, later on, we'll try to get a gauge on what was the Q4 number. Now, many firms are starting to look into 2020. We're going to talk about that in a second. But for instance, some reports like Goldman Sachs is saying that about $500 billion of money next year will come from stock buyback. So the biggest thing is like big corporations keep doing purchasing their own stocks. Remember, one of the things we've been saying for a while, today there is half of the listed company that about 20 years ago, 20 years ago, and not only now is half of the company listed, now there's less and less shares available for people to purchase because all the companies buy. Still, mutual funds and pension funds have not been net buyers. They've still been net sellers, even in 2019 with this great market. Argentina announced a collection of measures over the weekend. There is new export taxes on exports, taxes on foreign purchases with credit cards, double indemnity in case of firing people in the next 180 days. Not yet some clarity on the debt renegotiation. We will discuss it tomorrow, Monday. We'll look into that. We're going to read today, and then we'll bring it tomorrow morning. But clearly, we are thinking that it will be close to a trading buy in Argentina. Many negative news, very negative expectation, and sometimes when you go against the consensus, you can make some money. So we'll look into these measures and we'll see what's the story. During the week, as we say, the Fed didn't touch rates. No one was expecting that, and also, kind of let it be or left it be that we'll see what happens in 2020 with the economy. Some people think that the Fed will not do anything the rest of all in 2020. We think it's premature. I think the Fed, like always, will be data dependent. And as we've been saying before, with these two very strong labor numbers in November and October, the Fed has no reason to keep cutting rates for the time being, which was the last things that they did. Also, during the week, we have the CPI, Consumer Price Index, and the PPI, Producer Price Index. They came basically in line. The PPI slightly lower than expected, but not more than that. The biggest things came towards the end of the week. First, on Thursday, we have this huge landslide victory by Boris Johnson. The Tories have a complete majority, 364 of the 650 seats available, a gain of 47 seats, and Labour lost 59. In some districts, Labour lost places that it had held in the 1930s. So it's a huge victory endorsing Boris Johnson's view that come January 31st, we had an agreed deal with the European Union. We just need a vote in the Congress, in the Commons, to get approved and move on. On that, clearly, the British pound rallied, and that was very positive. And the other thing is, it came last week also that Mexico now does more trade with the United States than Canada. If you add import and exports, it's over $600 billion. And something that we've been saying that is important for our markets in Argentina, Brazil, and the rest, AMLO, Andrés Manuel López Obrador, the president of Mexico, is more and more becoming the key player or the key partner with Donald Trump, therefore the key guy in Latin America. Also, together with impeachment, that it went without much story, the lower house in the U.S. recommended the approval of the new NAFTA agreement. It's called now AMCA, which is a victory for President Trump and also for Canada and Mexico, that this new agreement will go in place. So again, very important, we think, for the region that AMLO, which is a president which is nationalistic, populistic, left-leaning, still, when he came to do a big agreement with the United States, had no problem, did the modifications and signed the thing. A lot of people are talking about the 2020 predictions. Very important on that side. A couple of things to consider. The Fed, is accommodating not just the Fed, but Central Bank of Europe, European Central Bank, Bank of Japan. We have an economic rebound, not just in the US, around the world, more timid in Europe and Japan, but still an economic rebound. There is plenty of liquidity, not only by central banks, but the money market funds are huge. They're very large. People have not been actively playing in the markets, which have led not to crazy valuations or crazy situations. And one a good example is many of these companies that were in the private equity domain, when they wanted to come public, the market did not tolerate valuations. WeWork, Uber, Lyft, many companies like that. So most people are bullish on the market on a basically, let's call it 3,200, 3,160, the S&P as of Friday, 3,168. Most people are calling anywhere from 32 to 35. Eddie Ardeni, which we respect a lot, is the biggest at 3,500 with a 10% rise. And the only negative is Morgan Stanley. Not the only, one of the few that are negative is Morgan Stanley with 3,000. Very interestingly, we were looking at the Morgan Stanley numbers. They are not worse than the rest in terms of S&P earnings and GDP growth and the level of interest rates. But they think that the multiple, it will contract from about 19 to 16. He thinks that equities will get a more reasonable multiple. It goes a little against the grain because most people will say at the end of a bull market, always there is some exuberance, some excesses, some craziness, and we're not there yet. So who knows? But most people are positive, and that's the risk. The consensus is there because the other thing that's very important, the China deal was done. The phase one was approved, so we have no uncertainty on Brexit. That's a positive. No uncertainty on this China war. That's a positive. So the market should go easy. We're looking into the markets. We'll have our comments probably this week. Most likely, we like where we are, but maybe you want to rotate into things like emerging markets that have only done 10% against the S&P 26. Maybe Europe, which is done the 16%. Maybe England, that because of Brexit, a lot of people didn't want to play. So we still like the equity markets. We like them better than the fixed income. If anything, maybe a barbell portfolio. Buy some money market funds that yield 1.5%, 2%, and then the rest go in risky assets, equities. And again, we like the US, but maybe a rotation into Europe, emerging markets. Europe with an accent in England, emerging markets with an accent in Mexico and Brazil, and if not, stay in the US. That's all we have. Like always, for our subscribers, every morning, 8:45 from New York, and you can get more information in our page, winston.capital. Have a great week.